Hello, friends, and welcome to our usual chat about the strategies in our portfolio that have performed the best over the last period. As always, though, before we start, I'd like to invite you to please leave us a like, subscribe to our channel, and go and click on that notification bell, you know where it is, so that you can stay updated with the release of all our new content. Hi, we are the Unger Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Okay, so today I want to talk to you about a currency future. And I'm talking about the Japanese yen, which tracks the trend of the exchange rate between the yen and the US dollar. Now, basically, like many other currency futures, we can say that the Japanese yen isn't very easy to handle with trading systems. And the reason for that is that generally this isn't a very volatile market. And in fact, we know very well that there are some institutions that are in charge of keeping the currency stable. In Japan, it'll be the Bank of Japan that will take care of the yen. In Europe, there is the European Central Bank, whereas in America, there is the Federal Reserve. As a result, currency futures tend to stay in a range. And of course, this isn't good for automated strategies, which, as you know, in order to work well, need momentum and need significant movements of the markets that we want to trade on. So today I want to share with you 2 strategies in our portfolio that have been performing pretty well lately. In particular, we're going to be looking at this strategy, which is calculated on pivot points, which is a well-known technical analysis indicator. This is a reversal strategy, so we'll buy at a support level calculated using pivot points, which is the blue line here. It's the slightly darker blue line. On the other hand, when a false breakout occurs at the resistance level number 1, we'll enter the market by opening a short position. So basically, we'll wait for a breakout below the blue line, and then we'll wait again for a rise above that level to open a long position. While, on the other hand, if there is a false breakout that has occurred at the opposite level, well, yeah, we'll go short. This is a strategy that over the last 360 days, we could say that over the last year or year and a half, since we're talking about trading days, has been able to, let's say it's gone through ups and downs. And as I said previously, it isn't very easy to approach these instruments systematically. We can see in the last few months of 2021 and also the first few months of 2022, this strategy was in, let's say, a somewhat sideways phase that unfortunately had been going on for quite some time. But then at some point with the more recent volatility, the outbreak of the war in the Ukraine, as you know, and some other external factors, the volatility in this currency market returned, and the strategy was able to take advantage of that. The trend, yes, it's undoubtedly erratic. However, I'd like to remind you that the performance that we're seeing here refers only to the last year or year and a half. The average trade, $220, which is definitely an excellent value. This is a multi-day strategy, so positions are left open beyond the end of the day, and eventually closed out with a stop loss or a take profit, or with a reversal of the open position. All right, let's move on to the next strategy that I'd like to show you today. Now, this strategy, we could say that is the opposite of the one that we've just seen. In fact, this is a trend-following strategy, but it's also based on an hourly bias that is present in this market. So we can open the long trades at the second bar, and then for 3 bars from the second bar from the beginning of the session. While on the other hand, we can open the short trades only from the 7th bar and only for 2 bars. The long and the short trades are opened, respectively, on the highest highs of the last 3 bars and on the lowest lows of the last 2 bars. So this strategy will therefore trade both long and short. Also, in order to avoid buying and selling against the trend, we added a trend direction filter calculated using a moving average. So if at any time the price is below this moving average, which is calculated using 200 periods. We're on a 60-minute time frame, so 200 hours. Then we will only open short positions. On the other hand, if the price is above the 200 period moving average, we'll open long positions. And in fact, you can see that in a bearish trend, as we've seen in the last period for these futures, the strategy has only made or tried to make short entries, which is exactly what we wanted to achieve. In this case, the average trade is lower because the positions are closed by the end of the session. So the positions are open for less time. And again, we can see that after a bit of a sluggish end to 2021 and early 2022, the strategy has indeed picked up. And it's been fairly consistent. So guys, go and give it a try too. Currency futures generally aren't the easiest instrument to trade with trading systems, but nevertheless, they can be a good option to diversify your portfolio in difficult times. So go and try your hand at them too. And if you want to know more about systematic trading, I'm going to leave you a link in the description of this video. From there, you can watch a free presentation by our founder, Andrea Unger, or get our best-selling book by paying only the shipping costs, or even book a free call with a member of our team. If you enjoyed this video, please give us a like. Go and click on that like button, subscribe to our channel, click on that little notification bell to stay updated on the release of all our new and upcoming content. And with that, thank you so much for watching, and we will see you again soon in our next video. Bye-bye for now.